Universal life insurance is a type of permanent policy that combines a death benefit with a cash value savings component. Unlike term life insurance, which lasts for a specific period, universal life is designed to provide coverage for your entire lifetime. The hallmark of this policy is flexibility. You can often change how much you pay and how much the policy pays out later. These policies build up cash value that earns interest, which you can sometimes borrow against or use to cover future costs. Universal life is generally more expensive than term insurance because it includes a savings element and lasts for your whole life. As you can see, the permanent nature of universal life insurance typically results in significantly higher monthly premiums compared to term policies. Always read the policy documents carefully, as fees and interest rates can impact how much cash value actually accumulates over the long term. If you found this helpful, subscribe for more money basics. This video is for educational purposes only and is not financial advice.